Hi fellow traders, I'm making this video to adjust my take profit target in sell position of USD CHF, and I'm going to share with you where is the new target of sell position and what are my technical and fundamental factors to support this modification of take profit. So if you look at upcoming event of first week of December, there are four significant events from United States. One is ISM manufacturing PMI going to be released on Monday, which is not very significant because I'm not expecting any positive surprise in this ISM manufacturing. If we look at the last four releases of ISM manufacturing, all of those four releases were negative compared to the forecast. Although we do not have the forecast of any of these data, we can still expect that ISM manufacturing is not going to surprise us in a positive way. Other two data are going to be released on Wednesday morning as per American time, so we'll have half of Wednesday before the release to trade without any influence of the news, and we already have the Monday and Tuesday, so we have 2.5 days before the release of two data on Wednesday, and these two data on Wednesday are ADP non-farm payroll and ISM non-manufacturing PMI. So I am trying to exit my position before release of these two data on Wednesday because not only these two data are going to impact the market, but also the most significant data, NFP, will impact up to a very significant degree. Now I am going to show you the technical factor which is supporting the retracement idea, and as I commented in my previous video that I didn't close my position despite market went up, made a new high, but I am still holding to the sell position, and the reason behind this is the temporary and unstable move during holidays. After formation of this candle on November 27, upcoming 2 days were not exactly 2 days, 1.5 days were holidays. 28th was Thanksgiving, and yesterday 29th was also half closed. Second half of the market was closed, and I have always seen that market makes temporary and unstable moves during holidays and then return right back to where it was. The same thing happened here, so that is why I had removed my stop loss, and I waited for the closure of the candle to see whether or not it breaks the previous high. So this is a false break. Market came back below this previous low, and if we contract the chart and go for the long-term view, we can clearly see that the market has fallen from this point to this point, and this fall was caused when there was a high negative sentiment because of the trade war going on between US and China, and recent development which happened from this point to this point, entire rising channel, all these both channels have been developed during optimism of a positive trade deal. So but optimism didn't cause faster upside move than the negative tension had caused. So still the weight of negative tension is bigger than any optimism, because market didn't recover more than 61.8% of the fall. If you calculate the fall from this point to this point, if you plot the Fibonacci, this is the 61.8% level, which is 1.0016 and 4, and market went up to highest here. High of the candle can be shown, so let me put the pointer here. It went up to 1.00233, just 5 pips above 61.8, and returned right back below Fibonacci 61.8. So not only it returned below the candle of 21, but also returned below the 61.8 and close, and also below this previous point. So these are the things which is telling clearly that this is a false breakout. The second thing is the speed. If you look at the speed of fall from this point to this point, it is very clear and apparent that the speed of fall is bigger. And as long as this channel was not broken, there was chances of reversal to the upside, because this channel seems to be slightly faster than this entire move down. But later this channel was broken to the downside, and then market started stagnating in the sideways in this up down kind of move. And if we look at the nature of USD/JPY in recent environment, when I say recent environment, I mean the optimism and the positive development in the US economy. This is the recent environment, and the previous environment between this move was completely different. In this previous environment, not only there was a tension of US-China trade war, but also there was no significant positive development in data coming from the US. So now we are going to calculate our take profit target as per the recent environment. And if we have to close our trade within 2.5 days, Monday, Tuesday, and half of Wednesday, we have to look at the probability of we have to look at the probability of maximum fall in 2.5 days. So we have to calculate how many pips market can fall in 2.5 days, and also we have to look at the tiniest retracement, because now if we consider this swing as the upswing, our sell position is going to just make a retracement in 2.5 days. Probability of retracement is there, and I believe that 2.5 days cannot cause the entire reversal to the downside, although there is a big probability of A, B, C, you can consider this as the C or this as the C, and the D to the downside. But this will happen if and only if non-farm payroll on Friday will come less than forecast. So we cannot wait until Friday on this ongoing sell position. We cannot take risk of non-farm payroll, so better to consider for the smallest retracement. And we will look at the smallest retracement in the past. So if you see these retracements are faster. It happens usually within 2-4 days, and then market continues up. So even if market will continue up, or whatever will happen during release of data on Wednesday, or release of NFP, before that market will market is supposed to fall down at least with the minimum retracement. And if we look at the minimum retracement, let's calculate. This is the minimum retracement from this point to this point. So let me expand the chart a little, and let me calculate how many pips market moved between this and this point. So shift, click, within a day this was 94.8 pips movement. So this is the tiniest retracement, or you can say the tiniest swing, and this is smaller than all other retracement or all other swings. So what I am going to target is even smaller than the smallest is what I am going to target for this retracement, for this sell position, so that we could easily get out of the market before release of data. So let's calculate the number of pips between the top and the Fibonacci level to understand where exactly should we place our TP, because determination of target is very important. Sometimes we enter the market and we know where to place the SL and when to exit in case of loss, but how many pips to target is very tricky task. Sometimes we close the trade early and then we regret that, oh my god, we could have made more profit. So here what I am going to do is the exact calculation. Not 94. I'll consider less than 94. I will because the recent movement. If you look at the recent channel, previous channel was faster, so upswing as well as the downward retracement were faster and slightly lengthier, bigger. But this time the channel is very small. The channel is slow. So upside move as well as the downside move are actually smaller than than the downside and upside moves of the previous channel. Previous channel. So, but if we compare the speed and the length of channel, this channel is kind of like 80% in terms of speed and 80% in terms of the length compared to the previous channel. So we will target 80% of this. 80% of 94%, 94.8 pips is something around 75-80 pips. So are we gonna get 75-80 pips from the top? Let's calculate. From this top, if we go down to Fibonacci 38.2%, this is merely 57.8 pips. So obviously we are not targeting 57.8, we are targeting something around 75-80. So if we go further down to Fibonacci 50% level, this is 77.3, and this is exactly fitting in our criteria of 75-80. So here we can place our target 99.44.6 plus add one pip plus spread 1 pip because all brokers have different prices, and plus a spread because every broker has a spread. So it will come around 99.47. So this is what this is where I'm putting my TP, and if this trade probably will close before Wednesday, I will come back. I'll make a new video, and then I will show you how to trade non-farm payroll on USD CHF. Probably I will be trading USD CHF instead of USD JPY, but it will depend on development of JPY and CHF in upcoming 2.5 days starting from Monday. Thank you for watching. Bye bye.